have you with us here on the program. Thank you very much for your time. And thank you for staying up for us. I think you're in the US, so...
it's only 9:40 p.m., so it's okay.
It's okay. So it's not yours. All right. But anyway, thanks very much. Samir, the budget was just that interim one. And we'll get to the budget and what you made of it in just a bit. But I want to start with, I think, what is on the top of mind here in India over the last couple of days, which is Paytm. The big 20% fall that we saw, the RBI circular, which kind of caused it. Yesterday, we heard from the management answering analyst questions. I'm not sure if that soothed nerves. But if you've been following it, your thoughts?
Well, we own it, so I won't talk much about it. But in general, I would think that what I understood is that this has more to do with the fact that Paytm Bank is supposed to be an independent entity with independent management, independent control. And they felt supposedly that it was, they had common maybe top management and common policies or things like that, rather than the bank being managed independently. Because from RBI's point of view, it might be that the bank is being regulated, but the fintech is not being regulated. So these two have to be completely different. If it is the case, if that is the case, it is still manageable. But if it is something more than that, then it would be bad. We have to talk internally. I'm in Miami. I didn't hear the thing. I only read and spoke to our head of research there. But it'll take some time to figure out even for us. But that is our model. Even yesterday, our NAV was okay, considering that one stock was down 20% because we buy 35, 40 names, and no one name spoils my sleep like it did spoil my sleep last night.
Samir, hi, good morning. Well, you're a seasoned investor in the market, so I'm sure no name spoils your sleep. But from an investor standpoint, a retail investor standpoint, if I'm not wrong, Helios FlexiCap Fund, as Prashant was also pointing out, there's, I think, little less than 2% allocation to Paytm.
Yes, all our funds are more or less around that.
Okay. So what do you do at a time like this? Because this is a larger issue, right? It's a corporate governance issue, so to speak. They have gotten multiple alerts from...
I don't think it's a corporate governance issue. I think it's an issue. But corporate governance means somebody's trying to fraud somebody, somebody's trying to take advantage of somebody. Mostly corporate governance means that the top management or the management is trying to take advantage of minority shareholders. Here, if the management has themselves just bought the stock from those Chinese guys a few months ago, you can't call it a corporate governance an issue, because when you are dealing in a regulated business, there might be an issue. It's not a fraud. Corporate governance looks a bit higher version than this. Of course, it's an issue. And for that, even we are not sure what we will do. So please don't take it as I'm trying to overly support it. But corporate governance should not be used that loosely, I would think.
Okay, fair enough. Let's get back to the markets then, right? There's one camp in the market that believes that the government ticked all the right boxes this time around, despite it being, a pre-election budget. They made some announcements on fiscal prudence, etc., which will work very well for the market. Do you think we're staring at a pre-election rally in the market now?
So first thing is, I didn't see the budget as I was really sleeping in Miami. There was no need to see it. Only twice in the last 20-odd years, I have not seen the budget. One was last night, and I think 1 or 2 years ago, I was in a flight from US to Singapore on that day by chance. And my office guys advised me not to change the ticket because it was going to cost me $500, saying, no, save the $500. And I didn't change it that time. But in general, I would think that a rally is happening and might continue because of the world is happening. But I don't want to any longer call it a pre-election rally as if the election holds any surprise. So we can just call it that generally the markets will be strong as they have been now in the US and everywhere. So in that connection, yes, markets can continue to be strong, but let's not make it as if the event of election holds any surprise. I hope it doesn't hold any surprise, because that surprise can only be negative. Positive, we are all totally assuming that it's happening, and it is fair to assume that or project that. So yes, generally markets are doing well, both from domestic flows, and although last month FI flows turned out to be bad, because of HDFC Bank, and then ATM I don't think caused that much of outflows. But in general, the results and all have been okay, nothing great in India. So it's okay.
All right. Hi, Samir. Good morning. Nigel on this side. Samir, the QSR theme, at one point of time, there was a lot of interest out there, and those stocks, they went to crazy valuations. Now, one of the stocks that, you have is Zomato. And I'm looking at some of these QSR companies, dine-ins are not looking so good. That Zomato stock actually, do you believe it has more tailwinds from here on, going by, the kind of deliveries and the kind of traction we're seeing out there? And maybe that could be an alternate way to play QSR because of the kind of valuations that they had surged up to.
So I was thinking when you were starting this question that you're going to ask me about Westlife, because you're in Westlife also, and I would have said that. But
so give us a view on both then. Give us a view on both, Westlife as well as Zomato.
As I heard your question, I thought that, I was thinking where you were going. So I thought I'll say that I know Westlife results are bad, but not to worry, I have Zomato, which is the sort of the balancing thing. Because ultimately, these guys are competing in one conceptual big space. I think the Zomato kind of business has helped democratize the food eating business. So instead of just going to 10 guys, you have 1,000 choices. And that's why when the pizza guy is doing badly, because now it's not only one company or two companies that have the delivery. But we like both. Of course, Zomato's second part of the story, which I fortunately thought of it quickly in the beginning, was that their Blinkit is also a very good business. Competing with the Kirana stores. Kirana stores close, let's say, are open from, say, I don't know, say 10 a.m. to 7, 8 p.m. These fellows, I guess, are open from 6 a.m. to 2 in the night. Half the time, they are a monopoly in your neighborhood. You don't have to be on the ground floor. You are on some fifth floor dark store. You are bargaining better because you have a national size compared to the poor local guy, whatever discounts or whatever margins he can get. And it's a good business. So that has got added, and that is why the stock is doing well. It's not doing well only because of the food delivery. But the food delivery, I have always argued that people keep talking on Twitter that how it costed them 70 rupees more and 60 rupees more to order rather than going out themselves and eating in the restaurant. And I always say, try it. Go and spend 2 hours in the evening going and coming and miss your Netflix movie. And then to see that, you go to the hall, you spend more money. The point is, it's value for money in terms of the time, the parking, the whole hassle of 10 people in the family all wanting to do different things and only meeting at the time and Zomato guy has come home. It's a different life and a different lifestyle, which now the people follow. I think it's a good business, but the stock is being helped by the fact that the second business is also doing well and actually very well.
You had gotten very
plus one more thing, because of the Swiggy's IPO plans or whatever, which I tweeted many months ago, well before they may have thought of it, and people used to say that there is big competition. And I said that when there is one listed player and one unlisted player, the unlisted player has no guts to fight a battle. Because if the listed fellow's stock price falls, the unlisted fellow shall always remain unlisted. And so they have to let the listed guy do well. And then there is some chance, some hope that at some big discount, somebody will buy the second company. You can't say, Zomato stock is down a lot, but by the way, I want to go public. So therefore, that is also, you can see that the pressure of competition has come down as these guys want to increase platform fee and other things, all which is good.
Samir, you were in early on Zomato, but at current price, are you still a buyer, or you think you would rather hold on to that position that you have?
So the thing is that in our business, because we are in the PMS and mutual fund and in the offshore fund, when new money comes, at least in the PMS and all, you can't have a different portfolio for every fellow. So till the point you don't sell, you basically buy. That's how it is. It is the old guy who's got the old NAV and the old price. And
I think
anybody.
Right. Samir, the other sort of obvious one to ask, and I remember we spoke early in January, and you told us that financials are the easy trade. HDFC Bank, I mean, of course, we've spoken about it quite a bit. And I think that was the consensus kind of view. And why not? I mean, valuations were cheap, etc. But it's not turned out that way since. What are you doing there? You think, and what did you make of all of this? The sharp price correction, Some said it was communication, it was not really results. I mean, your thoughts?
Actually, if you see the results of the other banks, it shows that HDFC Bank was not doing badly.
Correct.
If you see the results of the NBFCs, it shows that HDFC Bank was not doing badly. But yes, it was poor presentation. And also, you have to be on the front foot. I think the management was not, everybody was not there on the call. Mr. Jagdishan should have been on the call. You should have been aggressive. You see the other companies, you see the IT, they should learn from the IT companies. Nothing is happening. Every day they downgrade and then they say, we see some green shoots. And the whole world is happy in life. Just listening to the management saying, now we are seeing the green shoots. And then for 3 quarters, you downgrade earnings estimates. And again, you say, now I'm getting some long-term orders. I didn't get orders for these 3 quarters, but for the 4th quarter, I've got orders. There is so much storytelling in every business. I think our guys were too simple to sort of say that it'll take time or whatever. But I think overall, it's okay. And as I said, our model is very different. In the month of January, if you see our mutual fund, it outperformed the index with our number one holding down 15%. So we call it, we view it as, and the other funds also had similar outperformance or some outperformance, that, it's a relay race where sometimes some stock does well, then another stock does well. Precisely every time, all of them don't do well together. But as long as the package is working, we would call it that we have money in the piggy bank, which shall
Samir,
someday.
just one final question from my end. You're also betting on this travel theme in a big way. In your FlexiCap fund, you have names like, Lemon Tree Hotels, Interglobe Aviation. Now we've seen some fabulous results from the likes of Indian hotels as well. Do you think the run is done on this space, or is there more to go?
See, the FlexiCap fund, I am not managing, but broadly, most of the stocks are similar because the research is common. And so I also hold some of these in my the fund that I manage, which is the offshore fund. But the travel theme is more, for now, it is a semi-secular theme, I would say. We don't know for 10 years and 5 years. But generally in the hotel industry, these things will stop when the supply increases. And these days, the supply depends on what was started 3-4 years back. And 3-4 years back was COVID. So there is not new supply coming up at a scale which can change the prices. Just to give you my personal thing, when I moved to India in 1993 for Helios Capital, I used to stay at the Oberoi, because for 1 year I didn't have a house and I was staying at the Oberoi, which is now called the Trident in Nariman Point. And I was at that time paying about 6,500 rupees per night. And now for many of these hotels, maybe you can get it at 10,000 rupees, particularly if you're a long stay member. So imagine after 23, 24 years, the price in rupee terms per room has gone up some 50%. It is very, very low compared to the world. Right now, I'm in Miami and I want to tell you how much this room is costing. So the Indian prices are very reasonable. But more than that, I can tell you live, direct, my example, that it was like 33% lower at that time, or from that point, it's some 50% higher after 23, 24 years.
Yeah, I mean, we don't want to know how much your room costs in Miami. We are happy being here in Mumbai, not feeling bad for ourselves. But you have a good time.
I am not here for a holiday. I am here benchmarking hotel rooms and hospitality so that I can compare it to the Indian. Every day I work, every minute I work, remember.
Of course.
Samir, 30 seconds. I mean, you made a lot of investors, right? How's the interest level? More money coming into the market?
Yeah, it is. Next week also I'll be there in New York, but it's quite high. Now it has to be converted, but the initial interest is very high. It's very high. Actually, it is the highest, according to us, across any country in the world right now, based on whatever was happening at this conference. Yeah.
Okay, that's what we wanted to hear. But thanks a lot, Samir, for joining us. Have a good weekend and thanks for being with us. Let's take a quick break on that note. On the other side, we have our entire team joining in to give us a list of top 10 stocks. Stay tuned. Break it down to individual stocks now. We have a very strong opening coming up, but a lot of stocks in focus as well. First up, let's look at the two-wheeler auto sales, which did very well across the board. I'm going with green for Hero MotoCorp, for Bajaj Auto, for TVS Motor. The only one that is in the red is Eicher Motors because of the weakness in sales. But let me just take you through the numbers very quickly. Good numbers from Hero MotoCorp coming in. Sales up 22% year-on-year at 4.33 lakh units. If you look at TVS Motor as well, sales went up about 23% year-on-year. Bajaj Auto yesterday reported 24% sales growth. So all in all, the sector has done between 23 and 25% growth. Only Royal Enfield sales were under pressure in the premium end of the market. So Royal Enfield sales were down 2% year-on-year, coming in at 76,000 units. So I'm going with red for Eicher Motors, but the rest are in the green. Red also for Ashok Leyland this morning because the commercial vehicle sales were quite weak. If you look at the numbers, January sales, total sales were down 7%. The pressure has come into the MHCV truck segment. So MHCV trucks are down 15%. Total MHCV sales are down by about 8%. And the stock is also priced a part of that in perhaps. If you look at the trajectory in the last 1 month, the stock is down about 5%. It's underperformed the auto segment as well. So I'm going with red on that stock.
Okay, all right. Got that on autos. Let's hop across to Manglam. Manglam, tell us about Bata as well as Indian hotels.
Well, if you want to know anything about what's happening in the Indian consumer sector, just look at both these numbers together. Indian Hotels, premium player, and it's reported the best quarter in the history of the company. Highest ever revenue, EBITDA, margins, and net profit as well. 16.5% jump in the revenue, and mind you, this is not a small base. 22.5% jump in the EBITDA, margins expand, and strong internals. Occupancy is nearing 77%, and average room rent is close to around 17% higher. Around 18,111. They have 1,800 crores of cash on their books as well. Come to the other side of the spectrum, Bata, which is seen as a value player out there in a seasonally strong quarter. Nothing has happened. Revenues absolutely flat. The EBITDA has fallen 11.5% and the net profits fallen 30%. The companies increased their other expenses and they've said that, they've faced persistent market headwinds accentuated in discretionary spending. There as well, the premium part of the portfolio has done a little better and they are spending a little more to, perhaps enthuse some sort of demand that's still not coming by. So red for Bata and green for Indian Hotels.
All right, Mangalam, thanks very much for that. Emphasis is the next one we're focusing on. Rima's got details on this one. Rima, hi, morning.
Hi, morning. So revenue growth for Emphasis has come in lower than street expectations at 1% versus estimates of 2 to 3%. In fact, the top line has been boosted by an acquisition. So if you strip that out, the Silver Line acquisition, the performance on the top line would have been even worse. That said, the management commentary says we're seeing signs of stability despite the seasonal softness in Q3. Margin performance has come in line with street expectations at 14.9%, but there is a bit of softness on the top line, which could upset the stock today. Back to you.
All right, well, Sonal is with us to talk about Castrol and Bayer Crop. Sonal, over to you.
Good morning, Sonia. Well, both of them good set of numbers. For Bayer Crop Sciences, it was a good beat. Revenues were down 8%, but operationally the company did well. EBITDA up 50%. Their margins increased by 520 basis points to 13.5%. The profit was down 30%, but that's optical because in the base year they had an exceptional income from the sale of one of their businesses. The company says that they saw sizable efficiencies which helped margin improvement. And it is coming at a time when the other players are talking about weakness. So a green on Bayer Crop. For Castrol as well, it was a strong set. For their quarter ending calendar year 2023, their revenues were up 7.5%, EBITDA up 31%, margins expanded 500 basis points, leading to a net profit growth of 25%. So expect a green tick on Castrol as well.
Okay, thanks a lot for that, Sonal. Well, I'm looking at NMDC and the stock was strong yesterday as well, and it's actually looking quite good. And overnight, we had this update coming in with regard to their January numbers. The production numbers up close to around 8%, but the sales volume number is up close to around 18%, which is very, very good. Remember, there's a couple of tailwinds for them as well, besides this operational performance for January. One is that, we're entering that seasonally strongest quarter where steel production will ramp up big time. So they require more iron ore. So that's point number one. The second factor is global iron ore prices have been firm as well, and domestic pricing has been firm. And they've already taken 6 straight price increases in the last few months. So all in all, the stock should be in an uptrend, and in fact, it'll open well in the green today.
All right. Well, yesterday we heard from the Paytm management. We have Madhur Deora and the founder Vijay Shekhar Sharma answering questions from analysts. They made a presentation and then took questions. What's the street making of it, and what was said? Abhishek is here with that. Abhishek.
Well, the key highlights of the con call of Paytm was that Vijay Shekhar Sharma did mention that now onwards they will work only with other banks and not Paytm Payments Bank. There will be a requirement to have some operational change for which the work has already started. However, it is a speed bump is what he's mentioned. So they believe that with partnership with the other banks, they'll be able to see through over the next few days or in terms of quarters as well. They cannot foresee what they can and cannot see as of now because RBI has not sent any further details on the action. Jefferies, however, believes, the other way around. They have an underperformance rating. Target price has been put at 500 per share. They say that there is no clarity on genesis of regulatory restrictions being provided by the management. Management has guided for 20% to 30% EBITDA hit in terms of this regulatory action from RBI. The recent events will drag companies' growth and elongate the profitability timeline that the management had set out earlier. Back to you.
All right, thanks a lot for that. Here's a quick recap of our top stocks. We have stocks with positive news flow. There's Hero, Bayer Crop, Castrol India and Indian Hotels. While stocks with negative news flow, there's Eicher Motors, Ashok Leyland, Emphasis, NMDC, Bata India, as well as Paytm. But let's also find out what's happening in the world of commodities. Manisha Gupta joins in for a roundup of all the action there. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, I'll start with the crude oil prices where we have seen a big profit taking come in between 2 to 3% of a decline overnight, and we are trading below $80 a barrel for the Brent prices now. Well, there are talks of ceasefire between Hamas and Gaza, and that has led to some premium coming off the prices. Also, the OPEC and allies meeting yesterday continued to maintain the current production cuts. Markets believe that they might actually go some more aggressive in and increase output cuts, but that hasn't happened. On the other side, EIA also came out with a report suggesting that the global demand can improve going forward, and they have revised an upside target to 2 million barrels per day instead of 1.24. But all of these markets clearly are going to look at the interest rate trajectory going forward, the Chinese data and the stimulus measures coming in from there as well. And crude wasn't the only one. There was a sharp decline in base metals overnight. So between copper, aluminum and zinc, we've seen 1 to 2.5% of a cut come in for these as well.
All right, Manisha, thanks very much for that. We'll come back to you for more, but we'll take a break right now. Siddharth Khemka of Motilal Financial Services will be with us with some fundamental stock check. And we'll also have Kamal Singhal, Managing Director and CEO at Arvind Smart Spaces. They talk about their third quarter performance. Stay tuned.
Welcome back. Hope you're having a good morning. Well, let's get some fundamental analysis going on some of the stocks we just discussed. Sid Khemka, the head of retail research at Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Morning, and hope you're having a good Friday morning. Well, let's talk about a couple of stocks that we just discussed. And the stock that was in lower circuit yesterday was Paytm, and in all probability will be under pressure yet again today. What's your view on that name?
Yeah, very good morning, Nigel. Thanks to be on your show. Lovely Friday, especially after the budget, where the government kind of managed to do a fine path of balancing between growth and fiscal prudence, especially when they are heading into the election. So I think a commendable budget from the government on that front. Coming to Paytm, yesterday, lower circuit, it's a big blow to the overall business where RBI has kind of restricted the Paytm banks business from doing any business from 1st of March. So the management has come out and clarified that about 300 to 500 crores of impact on EBITDA, which will be a huge impact on the part to profitability. If you see, the entire street was positive on back of some of these new age stocks, for example, Paytm, which was the first to start reporting EBITDA profitability, then followed by Zomato, and then recently we had PB Fintech, which also started reporting profits. So I think it's a setback from the market perspective. The profitability will definitely get pushed 2-3 years down the line. Management has clarified that they will be working with the independent third-party banks to ensure that the core business, that the operating business of the payments, that does not get impacted. But I think we need to be very watchful. We have downgraded the rating to a neutral, and as I said, we are very watchful on the stance as to how Paytm business model is able to navigate in this uncertain regulatory environment. Definitely, we would recommend to stay away from the stock despite any fall that you can see in the stock price.
Okay, stay away from the stock. Don't get tempted by the fall that you're seeing. There's still a long way to go before, the investor confidence comes back. And of course, the hit that they've seen on their business. Got it. Siddharth, hi, good morning. On Indian hotels, what is your thought? Because, the stock has already rallied about 30% in the last 6 months. Very strong numbers coming through. But at this price of 500 rupees, is the risk reward still favorable?
Yeah, Sonia, good morning. So I see if you look at the overall hospitality space, they have done pretty well. And that is something that we have been talking about for last 2-3 quarters. FY24 has been pretty strong. There are a lot of large events that India hosted, right from the World Cup to the G20 summit. And the domestic tourism has also kind of taken a hit on the roof. So the budget also focused on improving tourism and developing several hotspots for tourism, so which should continue to remain positive. What we have seen is that overall numbers have been pretty strong for Indian hotels. The core rationale for being positive has been on the improvement in occupancy, which for Indian hotels rose 470 basis points on a Y-on-Y basis to 76.8%. That is pretty high occupancy for a hotel industry. Yes, December is generally, you can say, the best quarter for the hospitality industry. ARRs, again, we are seeing strong growth in the average room rents, which is again up 17% Y-on-Y to 18,000. Stock has moved up, but I believe that the upward momentum for the overall hotel space, hotel sector would continue on back of the strong numbers. We like both Indian hotels and Lemon Tree within that space. We have a buy rating, so we will be kind of upgrading the numbers post the con call, which happened today. But I think there is still room for upside in the hotel stocks.
Right. Siddharth, hi, morning. I mean, any stocks that are going out as recommendations today from your end at Motilal? One. And second, there are lots of, names which reacted pretty sharply. Aurobindo was down 7% yesterday. You had Fusion Microfinance. I'm not sure what the reason was. It ended 12% lower. Paytm we already discussed. Any thoughts?
Yeah, Prashant, so quickly on some of the top ideas that we are recommending is Titan. There is a broad-based growth, marginal disappointment in terms of margins because of the slower growth in the studded jewelry business, but management has clarified Q4 January has already started seeing improvement. So Q4 will be better than the Q3. This is one consumer name where it consistently does a growth of more than 20%. So that has been one of our top picks within the overall consumer space that continues to do well. There is issues with regards to some news flows that you said. Oro Pharma, was some news about the US FDA inspection in one of its plants where there could be some issues. On back of that, I think the stock price reacted negatively. Fusion Microfinance numbers will be coming on Monday. Last quarter, they had highlighted some issues, especially with regards to the regions in the Punjab region where the exposures there. There could be some incremental issues with regards to the book there. I think that is what the market has reacted to in terms of Fusion Microfinance. The numbers, as I said, would come on Monday. That apart, Aditya Birla Capital, that came out with very strong numbers within the NBFC space. I think the consolidated revenue grew 29%, PAT grew 39%. So pretty strong numbers. We have a buy rating on Aditya Birla Capital with a target of 220.
All right. We are also going to talk about Arvind Smart Spaces. I mean, this is an area that has done really well. The company reported a good growth in Q3 with sales and collections recording healthy double-digit growth. The company also said they clocked their best ever 9-month sales and collections. No surprises here. Kamal Singhal, who's the Managing Director and Chief Executive Officer at Arvind Smart Spaces, joins us now to talk about that. Kamal, thanks a lot for joining in. So year on year, it's been a very good growth, but it's a 12% growth in sales. But, on a sequential basis, there is a bit of a decline that we're seeing. Can you tell us what is the kind of quarterly run rate that you're looking at? Are you looking at double-digit growth year on year every quarter? And what is the visibility like in terms of, the number of units, etc., over the next, say, 12 to 18 months?
Sure. Very good morning. As you very rightly said, that for the quarter, the numbers have been great. We've seen a fresh sales of around 280 crores, which is 12% more than the corresponding period last year. Even if you were to look at numbers on YTD basis, the fresh sale numbers have shown some very, very healthy growth. We have clocked a total fresh sales of around 784 crores, which means we have grown by 41% on fresh sales basis. The other way to look at it is that last year, in the whole year, we clocked an overall fresh sales of around 800 crores. And in the first 9 months of this year, we have already touched almost 800 crores there, about 784 to be more precise. Hence, we are in a very healthy trajectory of growth in terms of sales. Quarter on quarter, they do vary because a lot of our sales come from fresh launches. That's how the markets are, and that's how the markets behave, and that's how they should be. And depending on which quarter comes up with fresh launches, to that extent, quarter on quarter numbers change, and hence you might see some sequential aberrations here and there. But overall context, for the year as a whole, we have grown 40%.
So, Kamal, can you give us a ballpark number? What would the quarter-on-quarter run rate look like? I understand it's hard for you to decipher that, but if you look at the past 5-6 quarters, it's been very all over the place. One quarter it's about 300 crores. The preceding quarter it was 160 crores. So, over the next 3 to 4 quarters, can you just give us some visibility?
Sure, I'll just put it in the context of a yearly number. We've been growing on a very consistent basis in the range of around 30 to 40% over previous years, in most of the years, last 5 years. For example, last year we were at 800 crores. We are targeting to grow by 30-35% this year again, and that's the number we're chasing. As I just said, we've grown by 40% already in the first 9 months, and hence to clock an overall number of 35% should be achievable. And that's the target we keep. I mean, that's what we have been doing in the last 4 or 5 years. And even in the coming years, we expect to grow by this healthy 30-35% growth that I just said.
Okay, all right. Hi, Kamal. Good morning. Nigel on this side. So as you said, you're sounding very, very confident about this 35-40% growth or thereabouts. You'd also entered the Surat market, which has a potential, I think, of around 1,100 crores of sales. Give us a timeline. What kind of investments will be going into this project? And also, do you look at entering newer parts of Gujarat, your geographical breakup, basically?
Sure, yeah. Surat is a very, very exciting market. In fact, a few quarters back, we did mention that Surat is one of our focus areas. And a lot of efforts went into this market. We take a little bit of a time before we analyze and we get the right kind of opportunity. And for us, it's important to go deeper into the market that we want to go rather than doing one or two projects here and there. And they have to be of scale and size that we wanted as a company. Finally, we've got one very, very exciting product and project in Surat. It's a very large one, more than 300 acres in the outskirts, in the northern outskirts of the city. This is going to be a very large golf-based villa, come plot, come, mixed use kind of project. Surat is a great city. I mean, as such, Gujarat has 2 or 3 such cities which have scales. One of them being Ahmedabad and Gandhinagar put together as a twin city. And then comes Surat. Surat has demography. Surat has the paying capacity. Surat has the customer mix that we wanted for the kind of product that we had in mind and the scale that we had in mind. So it really checks a lot of boxes that we wanted before we enter a city, and Surat is in that sense a very exciting market. On top of that, Surat is now seeing a great traction as a market. You know that bourses have just come back, diamond bourses have happened. A lot of action and a lot of focus. Bullet train is supposed to be passing through it.
Right, Kamal, we have some details about those markets, but for this project specifically, what is the timeline in money you'll be putting in investment? 2 numbers.
Sure. This project per se is a joint development project, and hence there will not be very significant investment required in the land per se, maybe just about 40-50 crores thereabouts in the land per se. And because this is a very large project, maybe we'll take 5 to 6 months of time to get all the relevant approvals, etc. So we should be looking at launching this project somewhere in the middle of next year.
Okay. Anything in Gift City that you're doing? I mean, that place is also picking up quite a bit. Any potential there?
We continuously evaluate Gift City, and we are doing it as we speak. Let's see, and we hope that something should happen. But at this point, nothing concrete to share with you really on Gift.
All right. Okay, we leave it at that. Thanks a lot for joining in. That's Arvind Smart Spaces. Been a smart mover as well in the last 6 months or so. Just look at that. In the last 3 months, actually, it's up about 60%.
So I remember you were talking about Gift City, right?
Yeah.
Being you were there, and I was there in Surat, and what a city! I mean, it was my first time there a few months ago. I mean, absolutely astounded by. He mentioned some of the stuff, right, which is happening in Surat. The ability to pay is absolutely unmatched, but there is a lot of other infrastructure development which is also happening.
Absolutely. I think the pace of growth is just spectacular, right? Surat, Ahmedabad, etc. All right, let's do one thing. Let's take a quick commercial break. On the other side of the break, Shrikant Chauhan of Kotak Securities will be with us. Sudarshan Sukhani will also join in to give us some technical trends. Stay tuned.
Okay, welcome back. There's 7 minutes to go for the pre-open session. Shrikant Chauhan is with us as always on Friday mornings. He's with Kotak Securities. The Gift Nifty implied open is a 150-point gap up, so it's going to be a strong one. But can we get past, the 21,900, 21,970 kind of levels, which is the gap area that we were discussing earlier? Because you're going to open up right into that gap. Shrikant, tell us. I mean, what's your sense? Will we take this range out and then move to all-time highs in this leg?
Good morning, Prashant. Good morning, Sonia and Nigel. Yeah, I think there are bright chances that the market can cross these levels because it was consolidating below the important resistance level. And today, based on the equity markets and based on the macroeconomic factors, I think we are going to see this particular technical breakout. about 21,850, fair chances of hitting 21,950 and later on 22,150. So that's the overall formation that we are seeing. So the strategy should be to look for adding position. If we see the market is crossing 21,850, we can keep stop loss at 21,600, which was yesterday's lowest level. So in case if market breaks this level, then we can expect further more weakness. Otherwise, we are of the view that the markets are heading higher. But the real trend will emerge, Prashant, only after crossing the level of 22,150. So yes, we are going to see upward activity. That's the overall view. And we also believe that the bank nifty is also going to support because the bank stocks were underperforming in this particular move. But this time, because of the PSU banks and follow buying in private banks, I think bank nifty will support nifty and bank nifty can also go up to 47,000 levels.
All right, Sudarshan Sukhani is also with us. Sudarshan, good morning. Do you get a sense that this market is headed for a breakout on the upside? And if yes, what are the levels that you're watching?
Yeah, good morning. Yes, I have that sense. Even yesterday we talked about it. I think this market is going higher and likely to make new highs. We are talking about the Nifty. So the trade is very simple. Be long, buy on dips and hold on now. Don't be an intraday trader because a lot of the money will come on overnight gaps. So just stay with the Nifty. The Bank Nifty may be now putting its act together. So a small investment in the Bank Nifty is worthwhile. There are a few stocks which I can discuss if you like.
Yes, please go ahead, Sudarshan. We'd like to hear that.
All right. The first is an all-time favorite, Reliance. Reliance is now breaking out and it's now likely to make lifetime new highs. There's a significant, now this is not a day trade because the big money is made when you hold on to these blue chips. So Reliance is my first pick. The second is Manappuram. Manappuram has broken out. The chances are that at least among the NBFCs, it could be an outperformer. And the third is Tata Consumer. That's a stock, while FMCG is, a little laid back, that stock is making new highs regularly. So there are three stocks which are good for swing trading and positional trading.
Okay, all right. Shrikant, what about you? What are your stock ideas?
Yeah, there are like number of stocks which can do really well, and we believe that these bank stocks should do well. In that specifically, State Bank of India, which is currently trading around 647, 648. There the stock has formed higher bottom at 610, and after forming this high, it is just going up and up. So while looking at the overall strength in this sector and the performance of PSU banks, I think State Bank is heading for at least 660 and 670 in the near term. So it's a buy at current levels with a stop loss close to 640. We also like NMDC, which is very close to its previous high, and it is already into multi-year breakout. So based on the formation, it is heading for at least 250, 55. So NMDC is also a buy with a stop loss close to 218. And finally, a few oil and gas companies which have done really well, but in that specifically BPCL should do well, which is around 505. There we are expecting 530, 535 on the higher side, and we can keep stop loss somewhere close to 495.
All right, Shrikant, we'll come back to you for more. But for now, thanks for joining in. We'll take a quick commercial break here. We'll have the pre-open with us, which is about 3 minutes away. We'll also have Samir Dheer, Managing Director and Chief Executive Officer at Sonata Software, to discuss their third quarter performance. Stay tuned.
Welcome back. This is Open Exchange. You're watching us live from the CNBC-TV18 Motilal Oswal studio. Siddharth Khemka is still with us to talk about some stocks that are in focus. Let's get straight to that. Siddharth, big numbers coming through over the next 24 to 48 hours. There is SBI's numbers tomorrow. How are you feeling about the PSU banks in general? Would you buy SBI ahead of the earnings?
Yeah, so Sonia, if you look at the overall banking space, the results have not been that strong, especially if you look at in terms of margins. The NIM compression continues, and which is where bulk of the issue is. Credit growth has been pretty strong, and that continues to be the case. Deposits is where, again, a lot of fight is happening, where deposit growths have slowed down and the CD ratios have gone up, where the banks are looking to grow the deposits so that the overall business look better. But between all these things, the PSU banks have run really well. Specifically, if you look at overall the smaller public sector banks, where the growth has been much higher and much stronger. Looking at specifically, if you talk about SBI, we believe that it continues to do well. Overall growth has been pretty strong. It is one of our preferred picks for the year, and that should continue. But if you ask me, if you were to buy these stocks just before the results, it's a difficult call right now. The budget numbers have been pretty balanced, so that doesn't put too much pressure on the bond yields, and that is positive for SBI by themselves. So overall, for the quarter, we are expecting a 5% increase in the net interest income. The net profitability, however, we are seeing that could see a decline of 22% on a Y-on-Y basis, and that would be mainly because of the increasing in provisions that we saw some of these other banks also did for the newer regulation that has come out for. So clearly, I would wait right now if I am already not invested into SBI for the results to come out, and then would look at getting into the stock.
Okay, all right, Sid. Yesterday you had Shree Cement, that was an outperformer. There was that news with regard to that income tax issue that they had. Valuations are very, very elevated, but the numbers that they delivered look very, very good. And now the commentary that's coming out of the management is a little bit more better. I think the stock is clocked closer around 30,000 rupees after a while in yesterday's session. What's your view on it? Expensive, but it could get back to its winning ways in terms of growth. How would you view it?
Yeah, Nigel. So I think you summed it well. The results were pretty strong, and we have seen that the entire cement pack have reported very strong numbers. And Shree Cement too also, they also reported strong numbers. Plus, the management has highlighted that it has revamped its brand strategy, has launched the Bangur as a master brand for all the products, which should help achieve the company's objective to increase the market penetration and project the products as a premium product business. So we are positive, but as you said, stock is trading at a premium valuation. So on a EV EBITDA, it is trading at 19 times FY25 and 17 times FY26. The near term, on back of these strong numbers and management commentary, stock could do well. But given the premium or the high valuations, we have a neutral rating and a target price of 27,700, somewhere about 28,000. But if you see the other stocks within the cement packs where valuations comfortable is there as well as growth is there. So Ultratech is something that we like. Dalmia Bharat within the overall cement pack is our top pick from the cement pack.
All right. Thanks a lot for that. Just stay on. I wanted your views also on the IT space. We have Sonata Software that's on our radar right now. It was a seasonally weak quarter for the company. Their margins contracted while there was an exceptional loss of almost 175 crores. Although their international IT services revenues saw about a 3% growth in a seasonally weak quarter. Samir Dheer, the MD and CEO of the company, is with us, of Sonata Software. Samir, thanks a lot for joining in. I wanted to understand how Q4 is shaping up for you, because in a seasonally weak quarter, your international IT services revenues were up about 3% sequentially. I mean, the entire industry is kind of seeing a bit of slowdown in growth. But how is Q4 shaping up for you?
Yeah, hi, morning. So I think overall, the demand environment in general continues to be tough given the macroeconomic challenges and the slowdown in tech spend. But I think overall, we have clocked 3 to 3.5% growth quarter on quarter, with considering everything else that's happening in the industry is a pretty strong momentum. And what is heartening is that our order book, the book-to-bill ratio has been about 1.24 as well. So clearly booked more than we have built even in the last quarter. As we move forward, I think we're cautiously watching the environment, and we believe the same pattern that we have seen in the last 4 or 5 quarters that will probably continue. Of course, Q4, the current quarter, has also seasonality built into it. It's generally a seasonally weak quarter for one of the acquisitions that we made. But beyond that, I think for the whole year, we still think that the pattern that we saw in the whole year will probably continue into coming year as well.
Okay. I just want to make a quick mention. You've got to look at the rupee, which is opening stronger. I mean, much stronger. I mean, these are large moves we've seen. So, I mean, just coming to you, because you got the market open coming up as well. The currency is opened stronger. Yesterday, the currency strengthened after, the budget numbers were released. It's strengthened more. And you've got the yields, which have dropped a little bit more. We've got a 10 basis point fall in the 10-year here in India. And that is continuing, although, of course, I mean, the extent is a little less now. But it's, on the downward trajectory, which is what we really want, at least when we started. Of course, let's go back to Sonata Software. Samir, hi, morning. Prashant here. Margins, though, on the international side have contracted. I think about 50 basis points quarter on quarter, 100 basis points year on year. I think on the domestic side also, we've seen some contraction. Could you tell us, will that be the case continuing into what you're seeing in Q4 and into FY25 as well?
Yeah, so we have always guided that we want to be in the low 20s EBITDA for a fairly long time now. I think what happened in Q1 and Q1 we had, if you recall, a fairly large deal that we had won. So we had staffed up for that deal in Q1 without any revenue. And in Q2, we did not have to take the cost because the people were already there and the investments were already there. So Q2 had some one-time uplift in the margin. So Q3 is more or less like a normalized quarter now, back again in the low 20s EBITDA. And I think that's a trajectory we have always guided at between 20 to 22% or so will be at from an international business perspective. On the domestic side, I think our teams have done an exceptionally good quarter. I think it was a very strong quarter for us. Our gross contribution grew Y on Y about 26%. So we're very proud of the achievements that our teams have done in the domestic business. The overall correction that we did, or the exceptional item that we stated, is for the overpayment on behalf of the acquisition that we made, and those acquisitions are overperformed. What we've done is really budgeted out what is due to them this year and forecasted the earnouts that they will make, additional earnouts that they will make in the coming year. And that's what has flown through the P&L. So just as a one-time correction, you see that as an exceptional item. But otherwise, the domestic business, very strong gross contribution movement. And the international business, we expect to be in the low 20s even go forward.
All right, Samir, I think you have briefly referring to Quant, right? The acquisition that you did, which had revenues of close to around $37 million at the time of acquiring it. Could you tell us how has the performance been of Quant? Point number one, how do you see that ramping up? And give us further clarity on the contingent liabilities, because you have to make that payment over 2 years. 1 year is done. How much more to follow?
Yeah, so overall, we're very pleased with the whole capital investment we made in the Quant acquisition. I think it's really outperformed our top end of our expectations. So it's a good sign. And it's a good sign in two senses. One, because if you recall, the whole thesis that we had for Quant acquisition was that we have 2 scale accounts, and both of them have done exceptionally well. So it gives us 2 very large accounts in our top 10 customers. And also the differentiated services that they have on enterprise data and data privacy, that's a huge potential in the marketplace. So we're taking those offerings to the other clients of Sonata as well. So in the whole, I think clearly Quant acquisition has exceeded expectations. And as we look forward, I think that, like I said, the payouts are in 2 tranches. The first payout is due in Q1 and Q2 of this calendar year. And then the second payout, or the last payout, will happen in Q1 and Q2 of next calendar year.
All right, Samir, we'll let you go on that note. Thanks a lot for joining in and speaking to CNBC-TV18. That is Sonata Software with their business as well as the way forward. Just wanted to get a couple of stocks out of the way. The pre-opening rates have hitting with a gain of almost 115 odd points, looking pretty good at the start for the market. What's leading from the front? Take a look at SBI ahead of their numbers tomorrow. Let's see how that one is shaping up. You have auto stocks, Hero MotoCorp, TVS Motor reported good set of numbers this time, so those stocks are in focus. Indian Hotels had a very strong set of numbers as well, so that stock is looking pretty good this morning. In fact, record high numbers for Indian Hotels. The stock is up about 4.5%. And in the broader market, something like a Bata, etc., will definitely be in focus. Eicher Motors, by the way, is down and out, but Paytm, can't lose sight of that. Second day of down circuit for Paytm, down almost about 20% odd. So not looking good for Paytm at all. Otherwise, it's a good-looking screen that we have on our hands. 115 points higher now on the index. All right, maybe we can get a couple of more guests. Siddharth Khemka is still with us, so let's get his view on board. Siddharth, any thoughts on some of these stocks, in the broader markets that came out with their numbers, whether it's something like an Indian Hotel, something like a Bata? Bata is, of course, down 3%. Indian Hotels is up 4.5%. But in this space, what would you like?
Yeah, Sonia. So I think if you look at the broader market, the results have been pretty mixed. That's a case that has been, as I said, some of the stocks that we like, Max Healthcare, that came out with inline set of numbers. Despite Q3 being a seasonally weak quarter, the company exhibited healthy mid-teen growth of about 15%, both in revenue and EBITDA. And the EBITDA per bed continues to inch up on back of improving operational mix. We believe that the company is on track with its bed expansion program. We are very positive on Max Healthcare. It is one of the leading hospitals delivering consistent growth. And we see an upside of about 16%. We have a target price of 930. That apart from the NBFC space where there is a lot of pain, we saw Helios Capital coming out with a strong set of numbers. We already discussed that revenue grew 29%, PAT was up 39%, and we have seen growth across segments. So basically, we are seeing that the company is kind of seeing significant improvement in the operational metrics across business segments. And the asset management business, we are seeing some of the other standalone AMCs reported very strong numbers. So that looks like with the capital market gains, the kind of domestic flows into the AMCs, that is another segment that is doing well for the AMCs, standalone AMCs, as well as for the Aditya Birla Capital. So we are expecting a pretty strong set of almost 40% earnings CAGR over the next 2 years for Aditya Birla Capital, and hence we believe that stock could also do well within the NBFC space. So we have a buy and a target price of 220.
All right, Sid, stay with us. We're going to just sort of put the spotlight once again on names like Bata India and Indian Hotels. Mangalam is back with us with exactly that. Mangalam, hi, morning.
Morning. So one is a Tata company, the other is a Bata company. The Tata company, Indian Hotels, has reported its best ever quarter, highest ever revenue, EBITDA, margins, as well as net profit. Premiumization, premium travel, premium experience is doing well. And in a seasonally strong quarter, the company has just gone ahead and shown its mettle. Occupancies have increased, average room rates have improved, and the cash on their books is also 1,800 odd crores. For Bata, there is a struggle for sales growth. In fact, the growth is just about 0.4%, and that's weighed down on their margins, and that's weighed down on the net profit as well, which is down about 30 odd percent. The company has had to activate demand by spending more on advertisements. So they've spent higher on other expenses by about 20%, and that's increased as a proportion of sales. They have faced persistent market headwinds accentuated in discretionary spending. For them as well, premiumization is doing well. So for Bata, we can say it's a shoe bite. For Tata or Indian Hotels, Vataj.
Okay, well, that was a mouthful. Thanks a lot, Mangalam, for that. Well, let's move on. Ekta's tracking Dr. Lal Path Labs. There's a bull versus bear case scenario here. Ekta, over to you.
Well, yes, a couple of key takeaways from their call. Before we get to that, the company has acknowledged the recovery in non-COVID-19 volumes is underwhelming in recent quarters. They haven't guided for FY24 top-line growth. They remain confident of maintaining margins around pre-COVID-19 levels. No immediate plans to take price increases as of now. Goldman Sachs has retained its sell call. They've got a target price of 2,200. They believe the subdued volume growth trend continues for them. Core business reported low double-digit year-on-year growth. UBS has a buy with a target price of 2,950. According to them, the company is investing for future growth.
Okay, all right. We just have about 40 seconds left for the markets to open, and looks like it's going to be a very strong opening. 115 points higher on the Nifty. So we're going to, of course, talk more about that. The big movers are BPCL, ICICI Bank, Adani Ports, Kotak Mahindra Bank. We're expecting that. Of course, result reactions as well.
Sonia, I'll just take stock of the market because we're going to be opening at very, very good levels. The Nifty Bank is going to be opening closer to around the 20 to around the 50 DMA odd, and that's going to be a very strong opening. Last few sessions, you have the Nifty Bank that, in fact, has been outperforming, and it continues to do that well as well. You have ICICI Bank as well as Kotak Mahindra Bank. Both of them have done quite well in the morning trade itself, the morning tick. And from the Nifty pack, Adani Ports, well, that one is zooming away. Yesterday, the numbers look quite good. In fact, that's building on some bit out there. BPCL as well is higher. What's under a little bit of pressure then? Eicher Motors. Those numbers look very good. The stock, mind you, has been strong in the last few sessions. It's come in for some mild profit taking, down close to 100%. From the broader markets, the big winners should come up for you. NBCC, up close to around 5%. Big volumes out there. Hudco, big move yesterday. Today as well, it's opened up well in the green with a gain of close to around 5%. And Texmaco Rail is now up close to around 5% as we speak. So those are some of the big winners in the broader markets. Suzlon, I remember the stock had close to around 5 to around 6 rupees, just a year or so ago. Well, that one's hit 50 rupees today. So Suzlon's one of the big winners in trade today. In terms of result reactions, Indian Hotels, that one stands out. Even after such a big rally, that's opened well in the green. So that's opened with a gain of around 2% odd. On the flip side, you have Bata India, that's under some pressure. Emphasis as well is giving it company on the downside because those numbers as well look a little weaker than expected. So that as well is opened up with a cut of closer around 2%. Another couple of good movers this morning. NMDC operational performance looks superb. You have margins that could do better because they've taken price increases as well. So that one's open higher. And PNB as well is higher in today's trading session. Don't lose sight because Concord is another stock that's done quite well. So to sum things up, it's a solid opening for the markets. The Nifty has opened up well in the green, and the Nifty Bank is the one that's on the verge of breaching those crucial technical levels of 20 to 50 DMA.
All right, very, very strong opening. Just a couple of more stocks. Castrol India is reacting really well to its numbers. So just get Castrol India up for you. 7% higher now on that stock, so looking pretty good. Some of these railway companies, Texmaco Rail is up almost about 5.5%, so looking pretty smart there. KPIT Tech has been piling on the gains ever since it came out with its numbers and continue to, be very optimistic about its guidance. So KPIT Tech is up almost about 4%, but just look at the market go. 170 points in the green. We were talking about this earlier as to how this could perhaps be a pre-election rally, given that the government has ticked all the boxes in terms of fiscal prudence, better revenue expenditure, etc. The market is soaring now, and all your PSU stocks are the ones that are hitting new highs, whether it's something like a Hudco, NBCC, UCO Bank, PNB, Bank of Maharashtra. SBI as well, ahead of its numbers, is gaining some traction. So very, very strong opening.
It is a very strong opening. And, by the way, the Nifty now is coming up exactly to the gap area that we were talking about, which is about 21,867, 21,850 or so is the lower end of that particular gap area. So will the market find resistance here? If not, the other outcome is, the alternate outcome is that it sort of continues to build on this and it becomes a bit of a trending kind of a day. Can that happen this Friday? So we'll know in a bit. It's possible because overnight queues, etc., are strong. But it's also true that last couple of times the markets kind of got to these levels and then turned back down. Okay, just a few other names, right? So Hudco, I think we mentioned, it's the top volume traded gain. Every day I sort of, the first list of big volume-led gainers are all PSU names. Today is no different. Hudco is up 10%. NBCC is up 11%, if you can have these names up. Number one and number two in terms of the largest volumes out there. IREDA is at number 3 with a 4% pop. Indian Overseas Bank is at number 5 with a 5% gain. I'm talking about volumes. Central Bank is up 4%. You got, what else? BEML is starting 3.5% higher right now. ITDC, some of these names defy moves, sometimes logic, but maybe there are reasons. 6% on that one this morning. That is ITDC. And so that's the entire PSU pack. Adani Ports, we mentioned briefly, 3% higher. Numbers came during market hours, but a reaction full coming through now. And I think South Indian Bank is another one, which is about 2.5% higher. We've got IRB, which is about 5.5% up. KPIT continues the move from yesterday. It's up about 4%. And Repco Home is up about 7% as well. I'm not sure if there's any particular news flow coming through there. On the downside, Bombay Stock Exchange, last 2 days have been spectacular for BSE. BSE yesterday was up about 6% by close. It's pulling back a little bit, but just 1.5% pullback, that's it. Ashok Leyland is down about 2%, so at about 171. Rights is down about 3.33% at about 680. And that's it. Yesterday, there were a few more sort of large downward moves along with Paytm. Paytm, of course, is another 20% down at this stage. We'll come back with more in a bit. Max Healthcare is another stock which is down 4%. You'll hear from the management at the back of earnings in just a bit from now. All in all, I mean, 200 points. So yes, it is building on, and we are past the 21,900 levels now on the Nifty. Neelkanth Mishra is with us. He's Chief Economist at Axis Bank. Neelkanth, great to have you with us here. Thank you very much for your time. Neelkanth, of course, also heads the global research at Axis Capital. Neelkanth, how is, I mean, your first take in terms of implications for markets from what we've heard? So two things. One, let's assume that what we heard from the finance minister in the budget is largely what stays when we get the full budget in July as well, right? Because if it's vastly different, then there's not very much you can take off from this one. First, so will we see that? Will we see continuity like what we saw in 2019? 2019, there wasn't very much change between what was announced in vote on account and what was announced in July. So is that going to be this time around as well? And second, Neelkanth, there is some concern at the margin that maybe government spending is starting to peak out a little bit. You take a look at sort of capex spending, which has been projected to grow at about 11%. It's much lower than what we've seen over the last 3 years. Go on.
No, thank you. Thank you for inviting me on the show. On the first one, yes, I think the interim budget and the final budget shouldn't be very different. Remember that the government is a very large organization. There are many ministries. Those ministries are given budgets. Those budgets then there has to be a sense of planning. One of the reasons why, if you remember, the budget day was shifted from 1st March to 1st February, or late February to early February, was that there should be more time for planning. Now, if you announce a budget in July and you get it approved by, say, late July, early August, there is not too much time left for the ministries to start spending. So I think from a spending plan perspective, one should not expect much of a change. There can be, I think, changes in the speech. For example, announcement of new schemes, if some tax structures have to be changed, if say the DTC implementation have to happen, all are hypothetical, but those kind of announcements can happen. But from a fiscal numbers perspective, the broad contours should remain the same. In fact, they should remain quite predictable going forward. On the second question on whether the government expenditure is peaking out, I think that's a deliberate choice. So if you heard the comments from the finance minister, the call was very clear that we think that the private sector is now starting to spend again, and therefore the government should dial back its spending. And that, in a way, was the most remarkable takeaway from the budget, that the government very likely had the fiscal space to spend more, in the sense that the fiscal deficit target was, the range of projections from economists was 5.2 to 5.5%. And the government chose to go with 5.1%. And that shows that the government is confident that the private sector is starting to feel confident enough. Households are starting to feel confident enough in aggregate, and therefore is willingly dialing back. In democratically elected governments, this is the hard part, right? So economic theory says that government should spend when others are scared, and they should dial back when the others start feeling confident. The second part generally is very difficult for governments. It's quite commendable that the government has chosen to go down that path.
Wow, this is a fabulous rally that we have on our hands. Don't lose sight of that. It's ticking higher as we speak. The Nifty is now just about 100 points away from that 22,000 mark and that lifetime high. I mean, we're barely, 0.5% away from those all-time highs. The sensex is up 800 points. This is a huge post-budget rally that we have on our hands. Neelkanth, hi, good morning. So since we're talking about, analyzing threadbare the budget, the other thing that the street liked was that the tax receipts this time around. The expectation is that it could exceed the budgeted growth. The budgeted growth is around 12.5%. But there is one camp that believes that gross taxes could be higher because of corporate income and the point that you made about corporate spending picking up. Your thoughts on that? Do you think that could in any way have a positive implication overall?
Yes, so there are two elements of that. The first is what are the assumptions for the fourth quarter this year, so FY24 RE. And I somehow think that the government assumptions in the fourth quarter on the tax side or the direct tax side are actually too conservative. And once you adjust for that, the year-on-year growth in FY25 that is implied also will be a bit on the lower side. So I think it'll be easier to achieve those numbers. If you see the last, say, 30, 40-year pattern, the personal income tax to GDP has been rising steadily. The pace of increase has accelerated in the last 4 years. So between 2001 and 2019, the personal income tax to GDP went up by about 5 basis points a year. What we have seen since 2019, it is rising at about 20 basis points per year. I think the increase that the government has budgeted is quite a bit lower than that. So I think that those numbers seem achievable. On corporate tax, we had gone from 1.5% of GDP in 2003 or so to about 4% of GDP in 2008. That, if you remember, was the time when the government was generating primary surpluses. As the profitability, as the profit share of GDP started to come off, corporate income tax also came off as a percentage of GDP. It had dropped out to 2.3%. It is now starting to rebound. This was very much aligned to, if you remember, nearly all of last decade, Nifty EPS growth was only about 4% or so. Now that Nifty EPS growth is in double digits, mid-teens, it is reasonable to expect that this number also will improve going forward. So I think the FY25 on 24's base, the numbers are reasonable. They're not too conservative. But once you adjust for the fact that FY24 itself could be higher than what the government has in the revised estimates, I think those numbers look very credible.
All right. Hi, Neelkant. Good morning. Nigel on this side. Neelkant, what about the divestment target? You know, the roaring stock market with the kind of sentiment turn that you have had to some of these PSUs, would you have expected them to be a little bit more aggressive on that front? Because timing seems to be perfect.
You're right. I think the opportunities to execute on what the government has flagged, and I think does believe that the role of the government in business and the economy should be a lot smaller. I think that intent is still clearly there. I think part of the reason why the government has become a lot more conservative in its budget estimates for this investment is the successive disappointments. So you have the intent, you want to execute on something, but somehow the machinery is not able to execute on that. So I do think, in fact, if you look at the value of government holdings in the BSE 500, in just 2 years, in March 23, it was 12 trillion rupees. In December 23, March 21, it was 12 trillion rupees. In December 23, it was 35 trillion rupees. It has nearly tripled. And that's a great opportunity, I think, especially as the demand for equities from retail investors through mutual funds and directly is very strong. And increasing the supply for that. So as we are seeing the surge in QIPs and IPOs, I think it's a very good opportunity for the government to take advantage of that and also, prudently bring down the debt to GDP and the fiscal deficit targets. There is a reason why they're not budgeted for that because they've been disappointed by what the machinery has been able to achieve. But I'm sure there is an opportunity and it can be executed on in the coming fiscal year as well.
Neelkant, actually, it's so much happening. It's such a vibrant market. So I will identify some of these names in a bit. But the market itself, Neelkant, you've always believed that it's more the global macros and global market macros which will affect things here. It's quite incredible. Here in India, at least we had a small pullback, right? Short-lived, however short-lived, smaller pullback. In the US, 3 months now, nothing, just up and up. And of course, in India, we've got elections now. I thought we'll probably have some consolidation and then have a pre-election rally. Because surely elections are 3 months away. You can't rally for 3 months into the elections, right? What's your sense? I mean, what are you telling clients?
No, our view remains that, look, part of the reason that the US markets seem to have rallied is that, the hopes around a soft landing, the fact that the Fed will start easing interest rates. And despite the Fed now signaling that March may or may not be on the cards for the rate cut, the fact that 10-year yields have now fallen to 3.76 is a sign. I mean, I think this is mostly because of growth concerns coming in, and I think some of the signs that I see in, say, the small banks in the US, the balance sheets of some of these banks seem to be clearly a sign of concern. In the second half this year, I think some of the refinancing challenges for commercial real estate in the US, which we have discussed for a long time, but at least the rollovers haven't started in a big way yet. All of those risks, I think, are still ahead of us. And whether the rally will persist into the elections, given that, I think that elections, there is now a lot less of uncertainty. I'm not sure that that becomes a very major milestone for the market, because as the uncertainty on that is reduced, perhaps a lot of the action that was supposed to happen has been priced in. So I still believe that from a market and economy perspective, elections in the near term actually shouldn't have that much of an impact.
Okay, elections shouldn't have that much of an impact. Got it. Thanks, Neelkant, for joining in. Really appreciate your thoughts here. We have a couple of guests waiting by, so let's go across to them as well. Just wanted to point out that this is a roaring market that we have on our hand. Stocks like, BEML, for example, is up 8% right now. Very, very strong there. And Titan is the other one that we're looking at this morning. They're going to talk about their Q3 earnings. The revenues came in line with street estimates, but their gross and EBITDA margins both contracted year on year. Ashok Sonthalia, the CFO of Titan, joins us now to talk about that. Mr. Sonthalia, good morning. And as always, it's really nice to speak to you on CNBC TV18. First we'll talk about the slightly troublesome areas, right? And then we'll go to the growth areas. It's the margin contraction which is worrying the street a little bit. Can you tell us what are the challenges that you're facing right now? And what do you see as the trajectory on the operational performance over the next, say, 12 to 18 months?
So, good morning, Sonia. Yeah, we were quite happy and satisfied with the growth performance. While market was turbulent, gold prices were volatile during Q3, but still we could deliver robust growth numbers in jewelry and elsewhere, watches also. On margin side, of course, there was one region in jewelry particularly was that studded ratio was lower compared to last year. And there we saw some softness on the very high value solitaires and the sub 50K or sub 100K kind of diamond jewelry market. Q4 is an activation period for us, and we will wait to see the results of how Q4 pans out as far as studded jewelry is concerned. Watches, of course, wearable is doing pretty well. That's driving growth at this point of time. And that's slightly lower margin business in the watches portfolio. And we spent a lot in the marketing across our segments, particularly in jewelry and watches, to kind of not only position some of the new part of the lines, but of course, to kind of tackle the competitive intensity as well. Yeah.
Right. Mr. Sonthalia, good morning. Prashant here. This is not the very high value sort of segment which is seen as slower. This has got nothing to do with the artificial diamond bit picking up, right? I mean, you think that perhaps could have some impact?
We would not like to conclude that way. In India, particularly, while in US market we have seen a little bit, but I think still two distinct propositions, and we will have to wait and watch how does it pan out. But we will not attribute softness in diamond to kind of LGT at this point of time.
But it's possible, right? Because very high value, very high priced, as you said, in that segment.
So
it's
let me just
difficult to quantify. Sorry, go on.
Let me just correct, Prashant. So we saw the softness in the low value diamond segment, and in high value, only solitaire I'm talking about.
Okay.
Actually we also took some price correction because diamond prices have come down, but diamond prices came down globally because of the inventory overhang. A little bit whether lab-grown diamond has contributed to this. These are all things to be established. I don't think any one of us have a very, very clear handle on that.
Got it. Okay, so you're saying that in the watches segment as well as in the high value diamond business, there's been a little bit of softness. Watches also because, you know, of the higher share of smart watches, right? So overall, what do you see as the margin trajectory for the full year? I think earlier you had spoken about margins between 11 to 12% for FY24. Are you holding on to that? Do you think you could slip below the 11% mark as well? And for FY25, what are you guiding on margins?
So, if I remember correctly, the watches 9-month margin is so Q4. Of course, the 11 to 12 may have some minor slippage, but if you talk about next 2 years kind of thing, we definitely believe we will go back towards 13 to 14% and even try to improve from there. Because analog watch portfolio is also doing pretty well for us, and where margins are pretty stable and good. And the premiumization journey in analog watch is shaping up very well, and we are investing a lot more preparation and investment is going on to even upgrade further premiumization, which is right now getting into cost, but the value and benefit will be coming in the coming quarters. So we definitely believe that watches business will go towards 13 to 14% kind of margin profile.
Okay, all right. Hi, good morning, Mr. Soundarya. Nigel on this side. So I had a two-part question. You know, some of these newly listed companies, their CAGR on a 2-year basis has been much better than yours. So what is your updated market share? Are you holding on to the market? Point number one. And on the studded part of your business, you know, it's at around 24-25%, or earlier it used to be more than 30%. Do you gradually seeing that move up? I know Q4 is better than Q3. So how do you see the trajectory out there?
Of course, Nigel, competitive intensity is high because of some of the newcomers coming in at the sub-price band of 100 to 50,000, where, you know, many new players, startup kind of things, activities are there. And the established player who have got money or who want to get money, they are kind of expanding their network at a fast pace. And when you expand your network at a very fast pace, and some of the inventory push in that also gives you a growth rate. While we believe catchment to catchment, most of the places either we are holding on to our market share, or in some catchment we are still improving. That's the sense we have. And as far as the competitive activity is that, it of course make us sharpen our game, but it doesn't worry us.
Mr. Soundarya, two questions. One, for the overall business, as you said, Q4 is the activation period. It's early, but what are the trends you've seen so far? Is it looking good? And at this stage, if you can look into FY25 and tell us what kind of growth should we expect, what kind of margins overall for the business should we expect?
Prashant, January has done well compared to, you know, in Q3, where we saw December was slightly softer for various categories, and particularly jewelry, gold prices all of a sudden again went up. And quarter on quarter, if you look at, almost 16% gold prices have gone up. And that is where some customer hesitancy we saw in December month, but I think January customers are returning and the start is good. We need to see that it holds on for the whole quarter. What we have seen a little bit change, that there are other things also catching up a lot, particularly the experience segment, where travel, hospitality, high-end SUV, cars, etc. So I think people are traveling a lot. So when the festive or regions come, they come back and they make purchase, and we have seen very, very good growth in festive season. And then again, we are seeing in January, but it is not a very steady state that, you know, you have a continuous steady state growth every week, every day, or every month. And that is where we need to then maximize when customers have highest intent to purchase the categories where we are. And that is where the ad spends, etc., are kind of done aggressively at that point of time. I believe FY25, we have given FY27 guidance for 2.5x of jewelry. For the first 21 months, we are ahead of the required CAGR, and that gives us confidence that FY27 guidance for jewelry of 2.5x top line holds.
Okay. You now own CaratLane entirely. Will you be looking to merge that with the standalone entity?
No, there is no immediate plan to merge that entity. That now the new leadership, and not new leadership, the same, Avnish has become managing director and the same old folks. But yeah, there is a transition involved which has happened. I can only say they will continue to function as a separate organization, a separate team managed by a separate board, but more support and more knowledge sharing between the two companies are happening, and which is good and healthy for both the companies.
Okay, so you don't have any plans to merge that entity with your standalone business. Got it, at least as of now.
No, not right now, yeah.
Understood. And any kind of expansion that you're looking at overseas? Anything that you would be interested in? And if yes, within which segment?
Sorry, your voice got dropped in between. If you can repeat.
Overseas contribution, sir. What is it now? Where is it headed?
The CaratLane?
Overseas business, sir. Overseas business as a percentage of your total business as of now. How much is it and where is that headed?
As we speak, we have 14 stores across GCC and US. This business has been doubling, of the last 3 years, and we expect it to continue to keep that pace. We are getting very, very positive response wherever we have kind of opened our stores or wherever we have done our trunk shows. So US will continue to grow. We today have 4 stores, and I believe in next financial year we will add at least 4 or 5 more. GCC, we have about GCC, Singapore, and Qatar. We have about 10 stores, and they will also go to 20. So next year, from 14 to 25 to 30 stores internationally, shaping up very, very well. And now we are looking at even eye care. We had 1 store which did very well for last 4 or 5 months. And now another 3 or 4 stores are coming in GCC, Dubai area particularly. And depending on these 4 or 5 pilot stores, we will plan to add more in that region.
All right, Mr. Sontalia, we wish you all the best of luck. Thank you very much for joining us and answering all those questions patiently. Thank you for being with us here. Well, just a quick look at the market before we go on to the next company. We are up 250 points. So will we flex or will we fold? That's the question. I mean, is the market building on from out of this gap area, or will it respect some of these resistances? We'll find out soon enough. Max Healthcare is the next company that we are going to talk to. Third quarter growth has mainly been driven by average revenue per operating bed, which saw a 15% growth on the year. Occupancies, though, have come in a little softer on a year-on-year and a quarter-on-quarter basis as well. Mr. Abhay Soi is CMD, Max Healthcare. He's joining us right now to take some questions. Abhay, good morning. Great to have you with us here. Thank you very much for your time. So I think occupancies have come in at about 73%. As compared to 77% that we saw the same quarter last year. Could you tell us what happened? Is there some seasonality here as well? Or was that quarter sort of affected by a one-off? Let's start there.
So fundamentally, 2 things. One is this is higher bed capacity. So it's 73% of 4.5% more beds. The average length of stay has also come down by about 6 to 7%. So I think in its entirety, if you look at it, it's actually a growth. But in percentage terms, if you look at it, because like I said, it's of a higher base, then it seems like it's a % down. But other than that, also last year, we had a large amount of dengue patients which came in the current quarter in the month of October, whilst this year that hasn't been the case. So there was an impact of, I think, 0.3% over there. So I think you have one positive impact and one negative effectively, which is sort of summing it up as 73%, which is a 1% lower occupancy.
Mr. Soi, on the other hand, the average revenue per occupied bed, absolutely strong growth here. Could you tell us what happened, any particular segment which contributed disproportionately to this?
So we've been seeing this secular trend for a while now. It's not only this quarter. If you look at the last 4 to 5 or 6 quarters, in fact, we've seen that. And the main propellers of that has been international patients. That group for us has been growing at a 25% CAGR. Insurance, as penetration of insurance increases, we see people are a little price agnostic and more concerned about the brands. They pay the same amount of premium eventually. So for higher end surgeries, instead of window shopping and going into maybe smaller nursing homes, etc., they prefer larger established hospitals. So that segment for us has been growing at about 25-26% as well. I think other than that, oncology, which is our largest clinical program, has been growing at an outsized pace, whilst the rest of the organization has been growing at 14 or 15%. That's been growing at 20+%. Oncology is a high ARPOB business. And so all of these factors, kind of propel the ARPOB. I have been propelling the ARPOB now. They're fairly secular factors, and I think they've been propelling the ARPOB for the last 5 to 6 quarters.
So what does this mean in terms of margins? I mean, since the ARPOBs are getting propelled higher, on an average, your margins have been between this 26, 27, even almost 28% mark as well. Do you think you can build on to this in FY25?
So rather than margins, because margins and percentage terms, I've always sort of guided people to focus on EBITDA per bed. So whilst you see a small shrinkage of about 30 or 40 basis points on margins, you've seen there's been a growth as far as EBITDA per bed is concerned. Because EBITDA per bed is, again, on a higher occupancy, higher capacity that we're looking at. And, we've seen a secular growth for the last, this is our 13th consecutive quarter of EBITDA per bed growth. So, it's not a 1 quarter thing, it's not a 2 quarter thing, it's been happening for the previous 13 quarters. And in fact, year-on-year basis, this is our 13th consecutive quarter of Y-on-Y highest EBITDA.
All right. Hi, Abhay. Good morning. EBITDA per bed, the last recorded number was what?
I think it's 75.5 lakh rupees on an annualized basis, as against 66.9 lakh rupees last year.
Okay, all right. Oncology, share of oncology as a percentage of business, that's moved up by a couple of 100 basis points, and that's helping your ARPOB. Where do you see this number stabilizing? The last recorded numbers around 25.5%. How do you see this number move up?
So I think, like I mentioned, whilst the rest of the organization is growing at 14-15%, we've had a CAGR of 20 to 25% on oncology. So, I don't have the math on me, but, if you were to just sort of extrapolate that, you'd get the...
Okay, all right. Abhay, since oncology is doing well and you have an asset out there where a PE is looking to sell, that CVC is looking to sell the stake that they have in HCG, would you all be interested?
Well, I can't comment on that, but we don't typically look at single retail outlets. Our format is slightly...
You all haven't looked at this asset at all?
Like I said, I can't comment on that.
Okay. You have cash on your books, though. You have about 226 crores on your books. What do you plan to do with that cash?
No, we have 1,295 crores of net cash on our books. We are a debt-free company, and we add close to, this quarter we added less, about 250 crores, but on average, we've been adding about 300 plus crores every quarter to our kitty. We don't look at single retail assets, so we haven't really, it's not close to our knitting. We like large formats, hospitals, so to say, rather than smaller specialized nursing homes. So, that's the answer really on the HCG part. But, so we like to do stuff like Sahara, entry in Lucknow and so on. So, those are typically things that we like to stick to.
So for Sahara, can you tell us what is the latest on that in terms of occupancies, growth, ARPOB, etc.? Where are we at currently and what's the scope of growth?
So we haven't gotten into the saddle as yet because the deal isn't entirely, we're still waiting for certain condition precedents to be. Majority of them have been completed, and the couple of them which are pending are on schedule, on track. We were always to, last month we announced that we were to complete the transaction in the next 2 to 3 months. It's only been 1 month since then. So I think at this point of time, I won't be able to sort of discuss anything more than what we provided to the exchanges.
Abhay, you have one of the sort of most aggressive capacity expansion programs, addition of beds. But you're also largely focused in Delhi NCR, metro tier 1 cities, right? Will much of this expansion, where is a bulk of this new expansion going to come in? Because there is, of course, in tier 2, tier 3 cities, etc. I'm not, you'll have to evaluate the purchasing power vis-a-vis the cost that you will incur setting up shop there. But there is great need, that much is for sure. Because we see people from all over coming to metros and, of course, the Delhi NCR regions, etc. So just wanted some thoughts on that.
So we have a hospital in Bathinda, we have a hospital in Uttarakhand in Dehradun, we have a hospital in Mohali in Punjab, and they've been doing very well. They're the best hospitals in the micro markets, and amongst and very, very strong ROCEs, even compared to some of our Delhi hospitals, etc. We have been very clear that there are about 20 to 21 cities we believe at least 2 or 3 of our peers have proven viability. These are not uncharted territories anymore. These are charted territories. We will be looking at entering these cities because we intend to do what they're doing perhaps better. At present, all the expansion that we're doing is we're basically elevating a business need because, majority of our hospitals are operating at anything between 85 to 90% midnight occupancy. That means, there's waiting in some of these hospitals and, we have some unmet demand at our doorsteps. So what we are doing through expansion is really building adjacent towers, adjacent buildings, adjacent to our existing hospitals. So that's what I call brownfields. These are not greenfields in new sort of territories. 87% of our total expansion, the aggressive expansion that we speak about, is adjacent buildings to existing hospitals. Basically to meet untapped demand. So, typically if you have overspill of demand and you don't have adequate inventory to sort of this thing, that's probably the easiest business that you'll do in any, whether in hospitality or the healthcare sector.
Okay, all right. Thanks a lot, Abhay, for stopping by and giving us all of those details. Wishing you all the best for the remainder of this calendar year as well. Let's talk about the other big mover then, Suzlon. That's clocked 50 rupees today after a while. They reported a rather good performance in Q3. The street liked it as the margins, they did outperform, while the net volumes also surged on a sequential basis. Mr. Himanshu Modi, the CFO of Suzlon, joins us on the show. Hi, Himanshu, good morning, and thanks so much for joining in. I recall when we charted the last time around, you said that, in the first half of the year, 35 to 40% of business is executed. In the second half of the year, you have around 60-65% that's executed. Though on the execution front, for Q3 itself, it appears more or less flattish. I think 173 megawatt. Could you tell us, Q4 will be far better, and what do you end the year with in terms of execution?
So for Q4, certainly, I think we would be able to do RR numbers which are better than Q3. That has been the historical trend, and we are quite likely to continue with that trend. And we maintain that, typically in H1 we do about 35 to 40% of our volumes, and about 60 to 65% comes from H2. So we maintain that.
So what do you end the year with? Q4 has to be better than Q3. Otherwise, there'll be a degrowth on a year-on-year basis as well. Could you tell us what do you end this year with, and how does it compare with the previous year? That's FY23, because as of now, it's still a little bit lower as of 9 months.
So again, difficult for me to give you a specific guidance. We ended last year at about 664 for the full year. As of 9 months, we are right now at 437. Yes. So we are on course. Obviously, I can't give specific guidance on where we will be in Q4 in terms of numbers.
But you'll be as good as last year? 664 is what you did?
Yes, we did 664 last year, so I think we should be very close, yes, definitely.
All right. Himanshu, hi, morning. Prashant here. I mean, you've a series of orders since the last time that we spoke. Could you give us an overall outline? What's the total order book now, both volume and value-wise? And over what period is this order book executable, as you see it?
So our total order book is about 3.2 gigawatts now, and this has to be executed till FY26. So obviously some of it is for Q4 FY24 in the current quarter, and a large part of it is for FY25. Some of it spills over to FY26.
So it's over, say, about the next 2 years is what we need to execute this order book. In terms of realization, we continue that an average of about 6 crores per megawatt in terms of realization is what where we have this order book at.
Okay, so 3.2 gigawatts order book will be executed over the next 2 years. That's the plan. Got it. Are you seeing any interest from the private sector? We believe that tenders have come in from SJVN, NTPC, GAIL, etc. Can you give us an outlook on that?
So certainly, there's a lot of interest across the private sector and in the bidding segment. If we look at our current order book, roughly about 53% of the order book comes from central and state auctions, whereas 47% of our current order book comes from the C&I segment or the private sector, which is for captive consumption.
So we understand that you'll participate for more EPC orders as well. Can you clarify on that?
So we don't do pure EPC unless it's our equipment. Obviously, when we sort of supply our own equipment, it is a complete menu card that we provide to our customers. So we certainly do EPC for work for them, and the scope also could differ, but we don't do pure play EPC for third-party equipment suppliers.
You all don't have any plans as well in future to do pure play EPC?
No, I don't think so. I mean, our core continues to be, manufacturing and project execution for our own equipment, and we will be continuing to focus on that.
All right, Himanshu, out of your total order book, 62% is for 3 megawatt orders plus. And that it could entail better margins. Is that correct? If yes, what is the trajectory on margins from here on?
So just a small correction, the total order book, roughly about 73-74% is for the 3 megawatt turbine, which is the S144. In terms of margin profiling, our endeavors will be to try and improve the margins on the manufacturing business. We currently, hover around the mid-teens, but as we improve our supply chain and working capital norms, I think directionally we should be able to see some improvement in margins. Whether it's a 3 megawatt machine or a 2 megawatt machine, the margin profiling doesn't change much.
Oh, okay.
Okay. I just wanted to understand a little more about what's happening in the renewable energy space. The wind energy capacity addition that we've seen has over the last 12 to 18 months lagged the solar energy addition to a large extent. What are the key challenges that wind energy is still facing? And there is some support that has come in for 1 gigawatts offshore wind capacities through viability gap funding. Will that help, help the industry meet those challenges?
So see, in terms of execution, solar versus wind, wind certainly is much more complicated in terms of execution and commissioning of every single wind turbine as compared to solar. And it has been historically the trend, probably globally, that solar in terms of sheer megawatt capacity will always be more than wind. In the last few years, we've seen as a country anywhere between 1.5 to 2 gigawatts of wind getting commissioned every year. However, in this 9-month period in FY24, we've already seen 2.1 gigawatts of wind commissioning that has already taken place. So certainly there is significant boost to the sector that's happening. There are certain challenges on ground in terms of project execution, EPC contractors availability, but all of the suppliers, companies, logistical entities are pulling up socks to ensure that the wind execution capacity increases substantially in the country. Coming to your next point, yes, the 1 gigawatt offshore VGF that was announced by the Honorable Finance Minister yesterday is a very welcome move for the sector. It may not have any short-term or medium-term immediate advantages, but it's at least heartening to see that the wind sector has made a mention again in the union budget.
Sure. So you started by saying that 3.2 gigawatt orders will be executed over the next 2 years. But besides that, what are the kind of order inflows that you expect in FY25?
So we continue to see a healthy pipeline. I mean, when we met last, I maintained that, there is a good, healthy pipeline. And as and when we convert those into orders, we report those to the street. So in addition to the 3.2 gigawatts that we already have confirmed under our belt, there is a healthy pipeline that we are negotiating and with our prospective customers. and also existing customers to enhance capacities. So as and when those get executed into firm contracts and we receive advance consideration on those, we will certainly report to the street.
All right, Himanshu, final question. I know I've asked you this before, but everything's good at the price. If the price is good enough, will the promoter entity look to sell out?
Yeah, and I've answered this before, so I don't think so. I think the sponsors, the family, the management remains committed to our late founder's vision. Very incidentally, it is his birthday today, Mr. Tulsi Tanti. So we are all very committed to executing his vision, and I think whether it's right from the board or the promoters or the management.
Absolutely, and what a turnaround it has been, right? So congratulations to you and your team, Himanshu, as you've engineered that, and we look forward to speaking with you again. Thank you very much for joining us. Suzlon passed the 50 rupee mark, indeed a remarkable turn. Well, you got the market, which is 230 points higher, so it's not, 200 on the day, on any day, is large and good. So we'll just see if there's enough in the bag to push it higher from here. We'll take a quick commercial break here. We'll come back. We speak with an interesting company in the shipping side. G. Shivkumar is ED and CFO of G Shipping, and we discuss their third quarter numbers. Lots to talk about. Stay with us.
Welcome back. GE Shipping is one stock on our radar. It was a soft quarter for GE Shipping with a double-digit decline that we saw in revenues. G. Shivkumar, the Executive Director and CFO of GE Shipping, is with us. Shivkumar, thank you so much for joining us on the show. Appreciate your time here. Can you tell us first if, the bigger topic really is the impact of the Red Sea issue, right? Has that had any impact on your business? Freight rates have gone up quite a bit. So what has the implications been up until now? And what do you see as the way forward?
Yeah, so the impact, morning and thanks for having me. So the impact of the Red Sea business has been different on different sectors. So the biggest impact we've seen is on the product tankers. There was a big trade which is of refined products from the Middle East, from the west coast of India towards Europe. A large part of that is now getting rerouted around the Cape of Good Hope. So they're taking the long route, which doubles the travel time and therefore requires more ships, and therefore the market has got tighter. So that's on the product tanker sector. Crude tankers have had a small impact. where a smaller part of the trade actually goes through the Suez Canal, and so also the dry bulk markets. Product tankers broadly are much stronger than they were at the same time last year and than they were about a month ago, month and a half ago before they started.
Okay, all right. Hi, Mr. Shivkumar. Good morning, and thanks so much for joining. You want to give us an update in terms of rates? Dry bulk, I believe, is still a little bit softish. I mean, you could give us an update on crude tankers, dry bulk, as well as product tanker rates?
Yeah, so dry bulk, morning, Nigel. So dry bulk rates have been stronger than they normally are in the first quarter of the year. The first quarter, typically because of the Chinese New Year, it tends to be the weakest quarter of the year. They've been stronger, much stronger than they were in the same quarter last year, especially for the larger ships. The product tanker rates, as I mentioned, are significantly higher than they were last quarter. That's the October-December quarter, and than they were in the corresponding quarter of the previous year. Coming to crude tankers, they are a little higher than they were in the previous quarter, immediately preceding, but a little lower than, maybe 20% lower than they were same time last year. So broadly, product tankers and bulk carriers doing better than last year. Crude tankers a little worse, or rather little not so good. Yeah.
Got that. Mr. Shivkumar, morning. So overall, what is the vessel utilization right now, and how is that likely to shape up in the H2 that we are in and going forward?
Yeah, so if you're talking about vessel utilization for us, utilization is pretty much 100%. Market-wise, the tightness in the market, as I said, the rates are an indication of what is happening with global vessel utilizations. Product tankers are the tightest market currently. Again, we don't know how this will pan out going forward. The situation in the Red Sea is evolving every day. Every day there's something new happening there. So we don't know how this will happen going forward, how this will pan out going forward. As it stands, this is what we are seeing. Product tankers are very strong. And crude tankers are pretty strong, but not much impact from the Red Sea situation currently.
Can that last? Can the discrepancy last between product and crude?
Yes, it can, because not as much of the crude trade goes through the Suez. So if you have a very large crude carrier carrying oil from, say, the Middle East to Europe, which is the route which is most affected, right? Those typically don't go through the Suez Canal, so it's not much change. They would have gone round the Cape of Good Hope in any case. So not much of an impact there. Smaller impact, let's say. Yeah.
Okay. All right. Mr. Shivkumar, on the offshore rigs segment, I understand for the past quarter, one of your rigs, I think, was non-functional. And that's why on a sequential basis, there was some pressure, though on a year-on-year, it's still looking good. Could you tell us for quarter four, how much better can it be since that's come back? And what are the new rates, the revised rates of the rigs?
So we used to have rates. First, let's go through the rates. Rigs used to be at rates around 40,000. These are the old contracts which were there. Those rates are now, on recent pricings, are in excess of 80. In fact, one pricing in the last tender, which we were not in, was in excess of $90,000 a day. So we will reprice higher. The one rig which was on doing maintenance between two contracts has got repriced at a higher rate, and she has gone on higher now in January. She was off for 2 months in the last quarter. That was an expense of about $5 million just on doing the refurbishment, preparing for the contract. And of course, you lose revenue for that period. So yes, that last quarter was a blip, and it was completely expected because these are scheduled and you have to be done between two contracts. But the rates are improving across the board. Every pricing which we have seen so far is higher than the previous one.
All right, we'll let
including
you go
on the offshore vessels as well. So offshore vessels on 3-year contracts in India have priced between 50 and 90% higher than their old rates, which admittedly were very low to start with, but now they're at very decently profitable levels.
All right, we'll leave it at that. Thank you so much, Mr. Shivkumar, for joining us and taking us through your numbers. By the way, there's lots happening in the market, so don't lose sight of that. Just keep an eye out on a couple of these travel-oriented stocks, not just, Indian Hotels, which is up about 2.5%. It's a fresh 52-week high that Indian Hotels is sitting on. So it's up almost about 3% right now and 500 rupees plus. Interglobe Aviation also comes out with their numbers. And remember, this happens later in the afternoon. Remember, the stock, Interglobe Aviation, is up almost about 21% in the past 6 months. And today it's up about 1%. So expecting to see good set of numbers. Q2 was very strong for Interglobe, expecting an encore in this quarter. So this entire theme is playing out very well.
Oh, absolutely, Sonia. The other thing is the public sector space, the public sector banks basically. Look at the Nifty PSU index go. It's up another 2.5%. And if there is one clear winner, if you really wanted to sort of call it that winner out of the budget, it's got to be the PSU bank space. Yesterday, the index ended 3% higher. It's up another 2.5%. And maybe if you can just pull these names up, PNB is up 5% plus. So 125. Look at Indian Bank next. Indian Bank is up 4.5%. Stocks at about 550. Indian Overseas Bank is up 4% at about 54 or so. Union Bank is up 4%, 151. Central Bank is up 3% at about 62. Canara Bank is up 3.5% at about 518. And then there is Bank of India, Maharashtra Bank, UCO Bank, I mean, you name it. BOB and SBI, the biggest two, they are taking it a bit easy. They're up only about 0.75%. But I mean, some of these others, valuations are on the lower side, really, looking very, very strong. The market also, with a full 1.5 hours of trade behind us, is up 240, 250 points, which is pretty much almost at the day's highest point.
And, a lot of these PSU stocks, right, we were talking about that. NBCC, for example, it's really the big mover today, 16% higher. Now, NBCC has been winning multiple orders all through the month of September, from September last year. And, I think that order wins and everything coming together right now is really gaining, is really causing the stocks to gain quite a bit. So NBCC is one stock that we're looking at this morning. Apart from that, Castrol reported very good set of numbers, and not just on price action, but the volume action is very strong for Castrol this morning. So I think it's over 1 crore shares that are being traded right now. Yeah, 1.2 crore shares traded on the exchanges on Castrol right now. Big mover coming in there. But let's do one thing. Let's take a small commercial break. On the other side of the break, lots more coming up. Our Citizen MPC show, Lata, will be in conversation with CNBC-TV18 Monetary Policy Committee to discuss what the RBI will do. The next event to watch is on the 8th of February. More on the expectations coming up.
Budget exclusive. In the most comprehensive budget interview, Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead. In conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview, live and exclusive.
Spread adoption of modern farming techniques, market linkages, procurement